Hello everyone, thanks for checking out my video. It has been a sluggish start to September for the US stock market. Apple had a worst back-to-back loss in 3 years, wiping out about $200 billion of market value in 2 days. Nvidia and many chip makers were falling as competition and geopolitical risks from China kept rising. And all of a sudden, there are renewed worries that the Federal Reserve may raise interest rates more than previously expected. As a result, major indices kept off a losing week. So will the stock market continue to struggle throughout the rest of September? Let's discuss some of the market catalysts in this video. Well, there seemed to be a lot of bad news emerging out of nowhere last week. First, we had China banning iPhone use by government employees, as well as state-owned firms. Then, we had Huawei Technologies, China's leading smartphone provider, releasing chip-powered smartphones that could potentially present a threat to US semiconductor companies. Because of this, both Apple and Nvidia plunged about 6% for the week. To add on, oil prices rose to a 9-month high, which may pose a challenge for the Fed in their fight against inflation. And then, all of a sudden, the market started to worry about more rate hikes from the Federal Reserve again. Combining all these reasons, the broader market was weak for the entire last week. But just to write on to this last point, on Friday we had a few Fed officials who gave a slightly more dovish stand, and thus preventing the market from rotting further. But whether the little bounce on Friday can sustain, it remains to be seen. For this upcoming week, we have two potential market-moving events. The first one is none other than the CPI data. The new CPI figure is set to be released on 13 September, Wednesday. This inflation data will help investors gauge the Federal Reserve's next move in their rate hike campaign. The decision will come from the FOMC meeting that is taking place on 19 and 20 September, with the announcement scheduled for 20 September. Meanwhile, the various economic data are presenting some mixed signals. As a result, the market is widely expecting the Fed to adopt the wait-and-see approach and leave the interest rate unchanged for the upcoming meeting. That being said, according to CME Fed Watch 2, the market is still anticipating a 43% chance of another 25 basis point rate hike at the first November meeting. The other thing to watch this week would be Apple's annual event, where they will unveil the new iPhone and other products. The event is taking place on Tuesday, 12 September. Let's see if their new iPhone 15 or improvements to existing products can excite investors and alleviate the pressure that China's ban has imposed on Apple sales. Okay, let's now look at the technical analysis. SPY had a little pullback last week and closed right below the 50 moving average. This is the moving average that I will be looking at this week. Not just for SPY actually, I will also be watching it for Nasdaq and Dow Jones, as all three of them closed below this moving average last week. So if SPY can put 2 or 3 green candles above the 50 moving average, then the short-term bearish trend will be sort of reversed and we would likely move towards the recent high of 459 to 460 levels. For a full-blown bullish momentum to happen, watch for the green dotted line. That marks the upper end of the uptrend channel. If SPY breaks above it, then we have a high chance to be en route to all-time high. Okay, some may ask, will it happen this month? Well, I don't have a crystal ball. In fact, nobody can accurately give you an answer. So watch how the market moves and watch whether SPY can clear the resistance levels mentioned earlier, which is the 50 moving average and the recent high of 459. In terms of the bearish thesis, check out the MACD, it's about to have a bearish cross. This week's Apple event and CPI data will be crucial. If the market decides to continue its weakness, this would then mean SPY can't get above the 50 moving average, and that will in turn see the MACD crosses down. Support will come in at 440. This level in my opinion is a weak one. If the broader market wants to sell off, I think we can easily break this 440 level. That's when bears would like to backtest that blue dotted downtrend channel line. Ultimately, it may or may not touch that blue dotted line, but I would say 100 moving average would be the target at the very least, which sits at 433. In my opinion, if SPY hits that blue dotted line, which sort of converges with the green dotted uptrend channel line, as well as the 38.2 Fibonacci level, it has to bounce. And I repeat, it has to bounce because if SPY falls below these 3 support levels, it is very bearish for the entire market. So basically, to summarize, watch how the market moves after the 2 major events. They will likely set the tone for the next 1 or 2 weeks. If the market gets more bearish, I will find opportunities to sell cash secured puts. Let's now talk about Apple, who had its worst back-to-back days of decline in 3 years. It actually created a huge gap down when news on China's ban on iPhone usage for its government employees broke out. As you can see from the volume chart, the number was massive. The last time we had such high volume was coincidentally another gap down from Apple. That time Apple went on to rot for another 2 weeks. Interestingly, this time round, Apple bounced back a little after 2 days of slump. It even filled more than half of the gap. Okay, before you get too excited, that ugly looking candlestick formed on Friday is called a gravestone doji candlestick. I think just by hearing the name you will know it is a bearish candlestick. Allow me to explain a little. Basically, the long upper shadow suggests that the bullish move attempt to the upside at the beginning of the session was eventually overcome by bears by the end of the session. Here's a screenshot of intraday movement. As you can see, there was a late sell-off into the closing session. Okay, if you have learned something at this point, I hope you can help to tap the like and subscribe buttons. Anyway, to add on, the MACD is sitting at a spot that is ready to have a bearish cross anytime. So when you add all this up, Apple is looking a little bearish to me. Come this week, even if Apple bounces further up to fill the gap completely, I think bulls should not rejoice yet, because the top end of the gap is a resistance level at around 181 to 182. To make things even more complicated is that Apple is holding an event this week, and if that event doesn't excite investors, and with China's ban, don't be caught off guard if we have a sell-off in Apple. Support would be the recent low of 172. If it bounces up from here, then good. That will form a double bottom pattern, which is bullish. But if it doesn't, we will see 160's range again, with the next support at 168. To me, if Apple starts hitting low 170s or 160s range, that's when I will be excited to either pick up shares or sell cash secured puts, or both. Anyway, if somehow the bearish sentiment goes away or the event was spectacular with lots of new products and innovations, watch out for 182 resistance level. If we can reclaim this level and stays above it for a couple of days, that means the short-term bearish noise could be chucked aside for now. Heavier resistance will only come in at around 186, where the 50 moving average is. If Apple climbs above here, that's bullish. Honestly, if I am an Apple bull or have a bullish trade on Apple, I will be extremely careful this week. I could be wrong, of course. Let's now move over to Tesla. Given Tesla's past stock movement, I would say Tesla was boring the last 2 weeks. Can you see this whole row of candlesticks? They are just lining up and consolidating so nicely between 240s to 250s range, with a bit of peekaboo in the 230s range and 260s range. Well, it may seem boring to others, but not boring to me. Why so? Remember, I repeated this 1,000 times. Consolidation is good for option sellers, and I am one of them. More on this later in the option trading segment. Anyway, before I move on, this channel is growing like a tortoise, so can I ask for your support again? Just a simple like and subscription will be beneficial to this channel, and it's at zero cost. But if you really want to help this channel out, do consider signing up for a Webull brokerage account. Deposit $1, keep it there for 30 days, and you get to earn 10 free shares, and these shares are guaranteed. Webull basically works like Moomoo and Tiger, so if you already have this letter too, why not consider signing up for Webull just for the freebies? Feel free to not use it later if you don't like it. Okay, back to Tesla. First of all, Tesla needs to break out of this consolidation zone. Then we will know whether the next trend is bullish or bearish. On the downside, watch for 243 level. 2 to 3 days below this level with decent volume will give us a high probability to hit the 220s range, where the next support is, specifically at around 225. But hey, this is Tesla, it's super volatile, so at 225, don't get caught off guard if it continues to fall to test the purple downtrend channel line and fill the gap between 217 to 220. Okay, at this point, then yes, pay more attention. Tesla has to bounce. If it doesn't, it means Tesla is very bearish because below 217 means we are back in the downtrend channel. On the other hand, if Tesla bounces off that purple line, that's quite bullish in my opinion. That being said, who knows? Maybe Tesla won't even go close to that channel line. So if this week Tesla starts to close above 255 to 256 level with solid green candles, that's bullish. Because that will bring Tesla back above the 50 moving average, which it flirted with it on 6 occasions in the last 8 trading days. This shows how strong and stubborn this resistance level is, which also means if Tesla starts going above it convincingly, it's very bullish. For a full-blown bullish momentum to happen, we will need to see Tesla breaks above 265 as well as the long-term downtrend line. When that happens, if I am shorting Tesla, I will exit my position. Not financial advice for you, of course. In my view, breaking out of this 265 area means the top gap between 280 to 289 is very much inside. That will then also give us more chance to say hello to 300 level again. Okay, I hope these important support and resistance levels and the various chart reading can help you with making some of your trades. Whether is it a bearish or a bullish one, please comment down below if they are useful. Moving over to Google, I find Google quite amusing. They are like a loner kid playing in their own world. Previously, when many other tech stocks were rallying, they were falling. Now when others are showing weakness, Google seems to be quite strong. Anyway, as you can see from the chart, Google has been floating above the 133-134 support levels. That's bullish in my opinion, unless this level gets breached. Basically, the very short-term uptrend is still intact, which also means there is some chance we may head towards the gap between 139 and 140. That's one area of resistance, followed by another resistance level at around 145. But just to be careful, please watch the 133 and 134 levels closely. Again, if we have about 2 to 3 red candles below these levels, expect Google to test 129. A more important support level is actually the 50 moving average. For Google to be above this level, it is already more bullish than many other stocks. Therefore, by falling below it, it means it's joining the rest in the tech sell-off. That's when the big gap will likely get partially or fully filled, if 50 moving average gets breached in the next 1 or 2 weeks. Okay, here's a side note to add on. I don't know man, I just think the gap is too big to be ignored or not filled. But to clarify, this is nothing too technical. It's just based on the norm that 80% of gaps get filled. And this is just one too big gap to not be part of the 80%. But oh, to be fair, it did get filled by about 1/3 a few weeks ago. That being said, I still have a sensing that we could revisit this area. It may not be filled entirely, but yeah, it may well come back to this area. Quick disclaimer again, this is nothing too technical. Take it with a tablespoon of salt. Alright, moving over to options trading, something interesting to update this week. If you recall, I shared that I was looking at selling cash secure puts in September, right? But guess what? I sold a covered call last week instead. So, am I going against my words? Well, hear me out. There are actually lots of nuances in options trading. Alright, so when I sold this Tesla cover call on 6 September with a strike price of 320 expiring on 13 October, my rationale was simple. Tesla was looking weak at that point, but not weak enough to sell put yet. Therefore, I sold a covered call, which is a slight bearish move. Basically, Tesla entered the Ichimoku cloud but lost strength and could not break above it. That's bearish. Not only that, it has tested the double resistance level of 255 and the 50 moving average but got rejected. As shared earlier, it flirted with this area on a number of occasions and couldn't go above it. And guess what? After I sold the call option, it tested the level for the next 2 days and still couldn't get above it. Not only that, it also got rejected by the Ichimoku cloud officially. To add on, can you see this candlestick? It's called a hanging man, which is bearish. Adding all this up, you can see why my trade is up about 35% in just 2 days. Also, just to clarify, my plan to sell put options in September is still valid. I am still patiently waiting for good opportunities. In fact, I tried placing an order on Tesla but didn't get filled. I will keep you updated if my plan changes, so do stay subscribed for updates from me. Anyway, last Friday I had a cash secure put on Tesla that expired. The strike price was 210 and it was sold on 2nd August 2023. At one point Tesla went as low as 212 but did not breach my strike price before bouncing up. As a result, I get to keep the full premium as the contract expired worthless. I have spoken about this 210 level as a decent strike price in my past videos, but this support level could change along the way, so do stay subscribed to my channel to stay updated. Meanwhile, a very quick one, do you recall last week I shared this 210 strike price Tesla cash secure put that I opened very recently and was in the red? It basically turned green already. The takeaway from this is that one has to be patient when it comes to option trading, and more importantly, one must be able to handle the volatility in the market and wild swings in your trades. For more information about this trade, please check out my last video. I will link it at the top. Finally, this will be an eventful week for me as I have 4 contracts expiring. The first one is this cash secure put on Tesla, again with a strike price of 210, expiring on 15 September Friday. If Tesla doesn't fall to 210 by this Friday, the contract will expire worthless and I will get to keep the full premium. The second trade that is expiring this week is this cash secure put on Apple with a strike price of 165. I will watch this contract carefully, especially post Apple event. If there is a sell-off, I may close off the contract and take my profits. Otherwise, I will let it expire worthless if 165 strike price is not in danger of getting breached. The third trade is this cash secure put on Microsoft with a strike price of $300, also expiring on 15 September Friday. I think it's quite unlikely and low possibility for Microsoft to plunge $34 in just 1 week. Therefore, this contract will likely expire worthless too, and I will get to keep the full premium. Finally, there is this Google covered call. This is one contract that I have been rolling and rolling. A quick recap, I first sold this covered call with a strike price of 110, then I rode it to 113 and rode it again to 116 and finally rode it to 117.5. Looks like I have to rode it again this week. Anyway, I am contemplating whether should I just rode it for one last time, and if Google doesn't fall below my new strike price, I will just let the 100 shares get caught away. My base price for this shares is $100 per share. So if let's say I can rode it to 120 strike price and they get caught away, I will lock in $2,000 profit and whatever option premiums I have earned earlier. As usual, some end thoughts to wrap up this video. Earlier on, I shared some negative news that have surfaced recently, which affected the stock market. But if you take a step back, some of these news are not new, and some, even if they are new, are temporary noises, at least in my opinion. For instance, all the talks and worries about interest rate are nothing new that are unheard of. The higher for longer approach by the Federal Reserve has been emphasized over and over again. Also, the market has been expecting one more rate hike from now till the end of the year. The other stuff that are related to Fed's interest rate hike campaign, such as the different economic data and reports, are just short-term noises that cause temporary volatility in the stock market. That's why it is important to look at things at a bigger picture. Other news like geopolitical risk between China and US, competition in the smartphone industry, the chip industry, the AI industry, all this, once again, they are not new stuff. It has been going on for the longest time. Unless things escalated to say a war or a trade war or a massive meltdown in the economy or certain sector, I think investors should not be too worried. In fact, the ironic thing here is if things escalate, not to a war of course, nobody wants a war, but if things get escalated and the market crashes, I would be excited as I see them as buying opportunity. Similar to what we have seen last year when the market crashes left, right and center. Anyway, technical wise, the stock market rally for 2023 has weakened with the major 3 indices falling below their 50 moving average. In order for the bull market to keep running, they have to reclaim this moving average soon. Meanwhile, with the market rally coming under pressure, some investors may choose to remain cautious. But for me, the more pressure the market is facing, the more excited I get. What I am saying is nothing new, because it's something that I have been sharing all this while, and that is to pick up fundamentally good companies at discounted prices when there are pullbacks. These stocks are for my long-term portfolio. As for options trading, I have shared my plan in the last 2 videos, so do check it out if you have not. With that, I have come to the end of this video. Would really appreciate if you could like and subscribe before you exit this video. Thank you.